Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody guys, today we will talk mostly on the euro currency again. So you should know already that what Fed has said on a statement yesterday. As you can see, our warnings that something could go not as we and as most market expect has been confirmed. So that's just the reason why we have said yesterday that probably better to not anticipate the breakout 111 area, despite how bearish the technical picture looks like. Because Fed is the Fed, so it's trying to guess what really Fed will say. It's really very expensive. So that's why we mostly, at least in the current situation, it was not really clear. We have suggested that it would be better just to wait for either breakout or some other action that could happen. What in fact Fed had said. So in general, why market shows this reaction? So in fact, as you can see, Fed hasn't said something really unexpected. So everybody knows that there will be one rate hike in the current year. So this is not probably I would not treat it as the dovish comment when they said that we will raise rate not twice but just a single time in the 2016. So just take a look at the quotes of the Fed Fund rate futures. So you'll see that investors expect that rate will be hiked in September. It's approximately something about 20%. So this is not the probability that it shows a high chance of rate hike. So everybody expects a rate increase in December, and Fed has confirmed that. Probably investors were a bit disappointed from the more careful rate policy in the next year and in 2018. Maybe somebody have expected really that Fed will start screaming that yes, we're on the way of the just amazing recovery and we will rate on every session in 2017. Well, I think that Fed here just trying to get some insurance, because this already has happened in the beginning of the current year when they have started this rhetoric and they start to speak bravely that yes, we will raise rate for 4 times in this year. That was in the March, but after that situation has become worse, and they should somehow find the ways how to exit from this uncomfortable situation when they have given the promise that they probably should raise rate, but they can't do this because the overall economy situation is not supported this often rate hiking. That's why in the current situation, to not get again in this such sort of a bit tricky situation, Fed just keep door open for adjusting of the policy and to go back, step back from the trend of the rate increasing. That's why they said that yes, we carefully will look for unemployment, we carefully will look for a job market, and we probably will be less aggressive and take some a bit more average, some careful policy in 2017 and 2018 area. So that's probably has been treated by some dovish comments. But in fact, Fed mostly have said nothing new. They just mismatched the expectation of the more hawkish policy, more hawkish comments. That's all. That's why, guys, what we could do in the current situation. As you can see, 111 area still holds, and market stands in upward action. Right now, the major question is how durable this action will be. So how stable, because this could be the short-term reaction and market will turn down, and that will be one story, or market will continue to move higher, and that will be quite another tune. My personal expectation is that probably I suggest that this upward action mostly will be the short term, because previously we already saw, take a look, this action, fast action with the supportive bearish data that we have seen here and here, but they have finished very fast and market turned down again. Yes, this reaction, first psychological, some emotional reaction on the statement, but in reality, when the market participants, investors will analyze what have been said in reality, well, it's probably it doesn't. This comments doesn't deserve some significant rally on the euro currency, because rate hiking in the United States still stands on the horizon. In 2017, although Fed has said that this will be probably less aggressive policy, careful policy, but they probably will rise rate twice in the 2017. It's very probable. That's why overall situation will continue to press on the euro, and we will see what will happen, because patterns, as I said, valid. So bullish patterns still valid, but I think that hardly this reaction will last too long here. I think that's mostly emotional and psychological reaction on the Fed statement. That's my opinion. Technically, we will continue to monitor action on the follow time frame chart. So recall our yesterday discussion. So also, guys, take a look. Be careful with any patterns that stand against your suggestion. So although yesterday we have discussed the possible breakout, we also have mentioned this bullish divergence and said it's better to not take the position in advance of the Fed comments. And you can see how this really what is truly for markets. So right now we see that the market stands above the monthly and weekly pivots, and it stands still in our fifth leg to the upside inside of the triangle. Now we will continue to monitor this action here. Market right now is approaching to the strong resistance. This will be weekly pivot resistance 1, 50% favored euro 50% level, 2046, 1246. It's from that top to this bottom, 50% resistance, and it's very close to the upper border of this triangle. So here we will be watching what will happen. As we said, if market will turn down and will not touch this border of this triangle, this will be bearish sign, and in this case market really could return back to the bottom. If market will take attempt of the breakout and will break this triangle to the upside, well, this will probably give the second life to patterns that we now have here. So this head and shoulders and butterfly, this could become the right shoulder of this pattern, and of course the guard is triple to buy. But in this market needs to break this triangle to the upside. This probably, guys, will be almost the same as breakout of the neckline, because the triangle border stands just few pips lower than the neckline on the daily chart. So that's what we'll be watching for currently on euro. So you can see our short entry is postponing for some time. Currently we can't say what time we need to get the more transparency on this market. That's what we see right now on the euro. Well, let's see what behavior, what market will show in the nearest couple of sessions.